Investors are also watching closely China's currency. The People's Bank of China has decided to allow the yuan to climb or fall as much as 2% per day against the U.S. dollar. Now, most currencies, by contrast, are free floating. This may sound like a small move, but it's actually a big step toward a more market-based economy. And as Sarah Eisen tells us, the shakeup could benefit some big American companies.
China wants a world-class economy, and to do that, it needs a world-class currency, one that can compete with the dollar or the euro. And China took a big step closer to that goal this weekend, letting the yuan float in a wider range against other currencies. That could help convince foreign investors that the Chinese economy is not slowing down and encourage investment.
In the long run, I think that it should make Chinese assets a bit more inexpensive, which could attract more investment. But they've got to get over the slower growth as well as the risk of further defaults.
It may also help the Chinese economy. Currency strategists have long held the Chinese government kept the value of the yuan low on purpose, making Chinese exports cheaper. But a stronger Chinese currency has a powerful upside for the global economy because the Chinese consumer will have more spending power. American companies that stand to gain from increased consumer spending in China include Yum Brands, McDonald's, and Procter & Gamble, among others. They've invested billions betting on the Chinese consumer, even if it means more ups and downs for the yuan.
When a country is making a fundamental shift in the composition of its economy away from investment-driven and export-driven and into domestic consumption-driven, that's bound to have some bumps and pitfalls.
Some will say that volatility will make the world's #2 economy look worse than it actually is. But for now, there's plenty of praise for China for opening up to the global economy at a time when other emerging powers, Russia for one, are pulling back. For Nightly Business Report, I'm Sarah Eisen.